Hi, I'm here with Pengana's highly rated Emerging Companies Fund and its co-founder and co-portfolio manager, Ed Prendergast. Ed, one of the things I think all of us would like to know is what makes a really great investor?
Well, I guess a few things. The first would be focus and focus on the value of assets rather than the price of assets. Because I guess we've spoken about it in the earlier question about volatility. That can be a distraction. But doing the homework and finding out what an asset's actually worth rather than where it's trading would be a good start.
And so on that, not getting confused with price is not necessarily the same as value.
No,
in
definitely
anything
not.
In life, but investing particularly.
Yeah, exactly. Yeah. And then also a way of finding where the value is would be a great start would be to avoid consensus at any level, because consensus is always what's baked into the current value of any asset that's traded every day. That's what everyone knows. And often consensus is, consensus in early 2009 was the share market really is broken, it's never going to return much more than 5% per annum, dividends might return, who knows, and it rose by 70% in 18 months after that. And consensus in 2007 was the share market's actually a pretty nice, safe, warm place to be, it's going to provide pretty good returns, it has done uninterrupted since 2003 and it halved. So they're extreme examples, but at the individual stock level, we see this all the time where people expect, so car sales, which is the online car website, 2 or 3 years ago, Rupert Murdoch said, okay, we're going to build we're going to take our site from number 2 to number 1, we're going to kill car sales, and the share price halved. And we looked and thought, well, hang on, the barriers to entry to this are enormous. It doesn't matter if it's Rupert Murdoch or Google, the barriers to entry are really, really big. Consensus was they were going to lose their market share, and we just sort of saw it at the time that no, they wouldn't, or very, very unlikely. And it just proved a point, and the stock price doubled after that when it finally emerged that Murdoch's attempt failed because he was too late. And there's lots of examples of that along the way at the individual stock level. And then the last thing we would sort of point out is avoiding emotion, which we definitely try and do. And there's 2 of us in the team, and this is just the way we look at it. We don't choose stocks ourselves. We both agree that we would buy a stock, and therefore when it goes wrong, because we do get probably 4 out of 10 wrong, maybe more. When it goes wrong, there's no emotion, there's no finger pointing, there's no, well, you got that wrong, what are we going to do now? And therefore the reaction is naturally to go into denial and sort of embarrassment, pushes you to sort of say, oh no, it's cheap, or we'll buy more. We avoid that entirely and just say, if something's wrong with it, sell it, just get rid of it, because usually when something goes wrong, it's not the first, it's a bit like cockroaches, you only see one, but it's never alone. There's always more problems in a business if it's unwinding. So just that removal of emotion and cut the losses if the story has changed.
Okay. And I know you're pretty modest about your own performance. So, your fund that you manage with Steve Black has outperformed its benchmark by a significant margin over a long time. So I won't put pressure on you to rate your own performance, but are there any sort of investment heroes that you have that you seek to emulate?
Not really. I spent 10 years in broking, so that was where Steve was a client of mine in his prior role. And so I spoke to a lot of fund managers over a 10-year period, and it's hard to name individuals. Dave Paradise is very good. Yeah. It's hard to name individuals, but certainly I got to sort of relate to sort of 20 or 30 really good small cap fund managers, and a few that I wouldn't rate, but just pick the best elements. So but names are always harder to recall.
Oh, well, thank you so much for your insights. It's always really valuable to hear from the experts, so thanks very much.
Cheers.